All right, back to work tonight, guys. Hope you had a fantastic day. Another great day comes to an end. It's Wednesday evening, though. We're getting ready for a very big Thursday trading session. I have a lot of great trades I'm tracking for tomorrow, and as always, I'm going to cover my favorite trade ideas in this video tonight. That way you get a game plan to make some money on Thursday. Before we jump in and get the game going tonight, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you enjoy the video tonight, as always, do me a favor, hit that like button. Give me a shout out in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, right? Let's get into it. Where are the best trades setting up for? Boy, great day today. Hopefully we can have another great day on Thursday. Where are the best trades setting up? Well, I'll tell you, boy, the S&P and the Nasdaq. S&P's pretty bullish. Nasdaq pretty bullish. We got those beautiful bear traps off those lows that we talked about in last night's video. But I'll tell you, it's more of what didn't happen today that is the most important clue that I believe will kind of tip us off to where the best money-making opportunities are going to be for tomorrow. So we'll talk about what I mean by that and how we can use that to make money tomorrow. It smells like reversals, though. It smells like reversals are probably going to be our best bet trading the S&P, the SPY, the Nasdaq, and the QQQs. I'm going to go into a lot more detail about bullish reversals, bearish reversals. We're going to cover all the details in the video here tonight. Boy, I'll tell you, oil is very, very bearish right now as they collapse off that big run up a few weeks ago. There's one really big reason why it's still very difficult to want to sell down here. And so we're talking about reversals, right? We have a lot of reversals and bear traps and head fakes I'm tracking for tomorrow. Could be a very exciting, interesting session for all the oil traders out there tomorrow. So we're going to cover that in great detail here tonight. All right, so charts are all ready. Trades are all set to go for tomorrow. Before we jump in and talk about each individual trade idea, let's all make sure we get on the same page for tomorrow. There are really two big news blocks you want to be aware of. We got the Philly Fed and the jobless claims coming out at 8:30 Eastern time. The Philly Fed will probably be the more important number out of that in case you're following along tomorrow morning. And one of my favorite numbers is that 10 o'clock existing home sales number. We oftentimes see some of the best volatility, some of the best opportunities around 10 o'clock Eastern time in our morning trade room. So definitely keep those two on your radar for tomorrow. Some of the kind of the first glimpse of big news we've had all week. We're going to have a bit of a break from the earnings season tomorrow. You'll notice there's, a couple big numbers here, but not really anything that you would really think, So we kind of have a bit of a vacation, a bit of a break after hearing from Netflix and Tesla this week. Next week, though, we're going to kick this up into high gear. Next week is called peak week, but it doesn't look like there's any really big earnings numbers coming out next 2 days, Thursday and Friday. So a bit of a break on that. So Philly Fed tomorrow morning, existing home sales tomorrow morning. And don't forget, we open up our trade room and we'll trade this stuff together 8 o'clock Eastern time. We'll have a front row seat for that 10 o'clock shock on the home sales number. Back to our charts, though. The money is made on the charts. And of course, as always, I'm going to cover all my favorite trades on each one of these charts tonight. If you like making money, I would definitely make sure you watch all the way to the end because every trade I talk about tonight can be applied to your favorite market. So don't just drop off after you finish your favorite market. I'm going to tie it all together. Don't you worry. All right, let's jump into the S&P. We'll go Nasdaq, and of course, we'll finish up on the crude oil here for tonight. Couple things here first. This is a 7,000 tick chart. These are all tick charts. You can see the exact time frames in the upper left-hand corner. This is the 21 EMA, the exponential moving average on all the charts tonight. And as always, I do like to incorporate or include some higher time frames. I've got some 60-minute charts, some 4-hour charts updated for you in the description of the YouTube video. I like to use these, especially 60-minute time frames, to give me an overall directional bias. So if you want to see kind of how the lens at which I'm looking at these charts, definitely check out those links in the description and you can find more of those down there. All right, so now that you know more of what you're looking at, what's the most important factor playing into the S&P right now? Well, like I mentioned in the introduction, we got that bear trap off the low, got that reversal, that beautiful squeeze. But if you recall from last night's video, the idea was pretty simple, right? We had a range right here. Remember that? bear move into a range, and we wanted to get that rotation. We definitely got a good chunk of it, right? Had a great session this morning in the trade room, but that run back up, they really should have completed that rotation, right? So like I mentioned before, it's really what didn't happen here this morning that really kind of has me thinking, okay, so we're pretty bullish, right? Look at that strong, it's a pretty strong move. We're pretty bullish overall on the 60-minute chart right now. You can't look at the 60-minute and say this is a bear market right now. So we definitely have the buyers in control in both the short term and the long term, but something smells a bit fishy, right? Something smells a bit fishy. We may be seeing signs right now. Whenever what should happen didn't happen, you always want to think, okay, what does that mean? To me, this means buyers simply don't want to buy high, right? Buyers want to buy as low as they can. And, we saw that today. We've seen it a lot lately, especially the NASDAQ, right? It's buying as low as you can right now, which really tells me kind of my favorite trade for tomorrow is I love to see this thing. We had a range down here, right? Kind of that choppy range there. I'd love to see him kind of pop up, pull back, and get a reversal off of this low, right? Get a bear trap, a seller failure pattern, like I talk about in our free trading course. So this is definitely one of my favorite trades for tomorrow, right? Buying a reversal or a bear trap or a seller failure off of that low. You can obviously see nice bull channel here, right? Nice bull channel. We've got a range right here. So this could easily try to finish off this rotation. You can easily see we've got some obvious targets up here at 41.98 So I definitely have some breakouts going higher, right? I definitely am not afraid of buying it as it goes higher, but there's one particular way we want to make sure we're entering as it goes higher. And then I'll tell you, every time we pop up right now, we seem to get smacked back down again. So I'd love to look for some reversals back down again. Now timing that reversal can be a little bit challenging because you're going against the overall momentum of the market. So we'll talk about the specific entry technique you want to use, be looking to use tomorrow for a reversal off of that high. So boy, we're going to cover a lot of this. We'll cover all of this for that matter in this video tonight. Let's talk about this move going lower. All right. Now this will also apply to the NASDAQ as well. If we end up going lower, right, that's kind of my favorite trade just because of what we've seen a lot of recently. Buyers want to buy really low. Now, the nice part about a deep pullback is it gives me a chance to risk small and get a really big reward, right? Back to those highs here. But with that risk reward ratio, comes a price. There's no free lunch in trading, as I always say. When you have a small risk for a big reward scenario like this, the price you pay is momentum. So as you guys know, I'm a big fan. We talk about this in the free trading course. I'm a really big fan of waiting for deep pullbacks, trapping in bears, right? So letting them try a couple times. You'll want to let the bears try at least twice, right? Let them try a couple times. And just like I talk about in our free trading course, you want to try to think about how I can use their stops as fuel and try to literally buy, right, and punch it into those stop losses. Now, keep in mind, this could be here. It could be here. It really could be any of these areas down here. It wouldn't surprise me if we take out that 41.50 and do it all again, right, tomorrow. So I like the idea of trapping the sellers in, getting that reversal going. Remember, using stops as fuel, like we talk about in the free trading course. And then at this point, the goal will be to go back up and retest that high, and potentially that momentum may swing and take out the big high overhead. How could I get in on the way up? Well, the easiest one here is a pullback. We talk about these a lot in the free video series, right? We call these failure into pullback combinations. Oftentimes, again, remember, failure pattern where you're trapping the bears in, and then a pullback pattern. A lot of times, by the way, these will go off a new trend line right there, a channel right there. A lot of times they'll come on right off that channel. It'll be very, very easy to find those trades here after that failure. So a failure into a pullback combination, that is definitely something I would track for tomorrow. Sometimes when these bears get trapped, right, and the market really jumps up like this, sometimes what happens is you get these little tiny trap levels, these trap entries like we saw late this morning, right? That is very common whenever you've got the bears kind of caught, right? It pops up like this. So think about this pattern right here. If we were to, again, trap these bears in and get that pop going higher, sometimes we get these beautiful, right, little tiny, again, we call these trap patterns, right, in the free video course, and that could also be an easy one there as well, right? So again, starting things off, remember, trapping the traders, right, using stops as fuel, and then do we see that failure pullback, or kind of one of my favorite trades, it's always that little bear trap, right? You guys know I love those. We talk about those in the free trading course, which reminds me, I've talked a lot about the free video series right now. I know that a lot of you guys and gals watch tonight have taken my free trading classes. You've learned all the failures, the traps, how to use stops as fuel. But if you're one of the few folks right now watching who haven't taken that free video series, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that video series will show you a simple trick to know exactly where the best winning trades will be each day. I'll teach you my 4 favorite entry patterns to help kickstart you making money on your own out there. If you're serious about making more money, if you're missing too many good trades right now, definitely grab that link to pop there and let me know how you do. I get a lot of great feedback about that free trading course right now. So definitely grab that link. And again, that could be here, that could be here, right? It's not easy to want to sell as we go lower, but how would I sell, right? How could I sell this thing on the pullback? You know, one thing about trying to sell short in an overall bull market, right, is I've got to sell traps, right? So if we're running lower on this, if you're thinking, okay, how do I short into this? The key is going to be trap setups. It's the only real safe way to sell this thing as we're going lower, because again, we've got all that bullishness, both short term and long term. Again, my favorite trades are wait to get down in, trap the bears in, stops as fuel, and then grab it right on the way back up. If you're thinking, no way, as we go lower here, the best way to do this, right, is to grab those bull traps, okay? Grab the bull traps. They might be able to channel coming off that high there. Just remember, though, right, keep it tight, right? Keep those targets tight, though. Targets and lows, right? Targets here, because as you can imagine, right, we may end up trapping in now, right, and then back up right from there, all right? So that's the way I'm looking at the S&P here right now. We'll wait and see what we get if we go lower. Now, we may easily end up running higher, right? I mean, come on, right? It's a bull overall market. We're bullish in the short term. We may end up running higher here because, again, that was kind of the ultimate game plan right now. So how do we make money if it does go higher here? Well, we've got some big resistance up overhead, right? It's not like we have blue skies above us here. And when you see on that 60-minute chart, I linked up down the description, you'll see there's quite a bit, right? There's quite a bit of overhead resistance up overhead here. So let's talk about the game plan now. Let's go over to the NASDAQ. The NASDAQ is going to be very, very similar here to the S&P 500. We'll talk about the game plan if we go higher here. Now, what's the deal with the NASDAQ? Same basic idea, right? If you watched last night's video, we talked about how we had that bear run down, right, into that range. We wanted to get this thing to go lower, try once, try twice, right, and then pop it back up again. So we got the bear trap we were looking for here today. But again, in these situations, you're expecting this thing now to rotate, right? You're expecting this market now to rotate all the way back up using that trading range. Okay, it didn't happen. And again, whenever we see what should have happened doesn't happen, we always kind of wonder, okay, what does that tell us? It tells us that the buyers are clearly not willing to buy too high. So again, same thing as NASDAQ, right? I'd like to get these deep pullbacks, trap those bears in. We talked about this a moment ago on the S&P. So how do we buy it as we're going higher? And then how do we sell it off the highs? There are really 3 scenarios that I think you want to be aware of if we end up going higher. Okay, first of all, of course, that bull channel, strong run up. There's a decent chance we do open up. You know, we heard from Nestle. We're from Tesla a few hours ago, right? They beat their top number, right, but missed their bottom line number, missed their revenue, probably all those price cuts. Anyways, that might end up right popping this thing higher here. How would you buy it as it goes higher? What's my concern? right? What's my concern? As I go higher, I'm always trying to kind of teach my students in our trade room. You always want to be asking yourself, how is momentum and how is location? Okay? So if I want to buy as we're going higher, momentum is great, right? We're bullish in the short term. We're bullish. We're a little bit less bullish on the Nasdaq than we are on the S&P. We're still leaning towards the buy side on the Nasdaq. So momentum is fine, right? We don't need to be that picky about momentum, but location's not, right? Location's not very good. We do not have blue skies overhead. We got a lot of resistance up overhead. And what you have to assume here now is the higher we get, right, the fewer the buyers are going to be up here, right? The higher we get, the more the buyers are taking profit and the more susceptible you are to one of these, right? Pop up and a reversal back down again. So here are the two ways in which you want to be looking to be a buyer. First of all, on the way up, you got to be thinking about bear traps, right? Traps are really the name of the game right now as we make our way up into taking out these highs. And we talk a lot about these, right, on this video newsletter. And boy, there's probably a 1,000 examples of these inside of that free video series, right? So it all starts with a strong pop-up, right? Strong pop-up, shallow pullback, right? It'll barely touch the moving average, and then a higher high in price, right? You can see a good example right here. I know it's kind of small, right? But strong pop-up, shallow pullback, higher high in price. You'll see examples of these on faster time frames, right? This is pretty small on this 5,000 tick chart, but on the entry time frames we cover in the free video series, you'll see these. They're pretty easy to find, right? So I'd like to find this on the way higher. Okay. Now, sometimes what happens is because we're so bullish, right? Sometimes the market just keeps on going. Right? Sometimes it keeps on going, right? And so although I like the idea of looking for a reversal back down, and I will talk about that in detail here in a moment, what would be enough what would the game plan be if we kept on going and going and going? Well, you want to think about pullbacks, right? So if we do end up running higher here, right, we got another big objective up there. And again, you'll see this on the 60-minute charts linked up in the description, right? That 13,348 is another big objective. So if we end up kind of ripping higher, right, getting that, again, that trap entry on the way higher, but now we don't stall out at the highs. No, right? This market really pushes and runs and runs and runs. Now the name of the game now is now we start looking for deeper pullbacks, right? And again, we'll talk about reversals here in a moment. Don't you worry, right? But if we blast right through this high, and we've got a lot of really good, one of the tricks is separation, right? See how the market right here separates off the moving average, right? See back here how the market is tucked on the moving average, right? See how sometimes markets separate and sometimes they're on top of the 21 moving average. So if we start separating off that moving average, right? We're not really sitting on the moving average, right? That tells me now that's a very strong move. Anytime we see a strong move, we can expect a pullback and a retest of that high. Okay? In this situation, what I'll do is I'll start looking for larger channels. Right? Larger channels, right? Draw them big off those highs, find those bigger channels. And I want to find a bigger channel because, again, we're running into overhead resistance. So I want to buy as low as I can, right? And to do that, we need some sort of deep pullback. What I always do is start looking left and start thinking, okay, that prior high. I start watching these prior highs. I call these reversal lines in my trade room, right? And those will usually give you a good estimate, right, of kind of where that pullback will want to go. I also like to use what's called measured pullbacks. So the amount of that pullback size, right? That pullback size can be projected down and can be that pullback size. So I kind of use those different techniques. Obviously, I can't predict them exactly right now, but I'm hoping I can kind of teach you how to use them. And of course, we'll do this together tomorrow morning in the trade room. But that's how I go out and kind of find some key levels here. Once we know the levels are, then we simply wait for that pullback. Okay, and hopefully now we have, remember the key here is enough momentum here going higher. That high now becomes a big bullseye. And once that happens, now we can look to trap the bears in, right? Get those bears trapped in. Remember, we like to use stops as fuel. We talked about this down here, right? Go lower, trap the bears in, back up again, right? Same idea here, right? Same idea. Trap those bears in and look to punch it back up to retest the high. Right? So kind of a classic situation, very bullish right now. If we can get some again, some trap setups as we cover in the free video course. Trap setups going higher, right? And then as we start getting too high up here now we go, okay, right? Find that bigger channel, wait for that deeper pullback, and then remember, use those stops as fuel for seller failure patterns to go back up and retest the high. All right. And again, this really only sets up if we can really punch through these highs, right? We really got to punch through those highs. Let's now talk about if we do end up back at these highs, right? So now we end up back at the highs. Again, this also goes for the S&P as well. If we end up back at these highs now, remember, big trading range, right? Again, you'll see this linked up. You'll see those on the slower time frames. In the description here tonight, we're a lot of resistance, right? There's a very good chance here that as we're going higher here, we're getting some trap entries, right, on the way up. But then as we start getting up around these highs, though, now we start running out of gas, right? We start running out of buyers. And what will happen is you'll see something like this, right? You'll start seeing signs of exhaustion. I always talk about, in order for you to pick a top in a bull market, you need three things, right? In order to pick a top in a bull market up here, you need a major turning point, you need signs of exhaustion, and you need some catalyst, like a stop run, right? Remember, because it's very bullish at this point. So if I want to sell off this high, right now, I need, first of all, a major turning point, right? Like a prior high, this area here. Okay, I need signs of exhaustion, okay, which will be the 2 try for the buyers, right? Show me these buyers are trying. And then think about where, remember, a catalyst is the third thing. Think about where their stops are going to be. And you want to try to sell into those stops. Now, one last caveat for this is when you have a strong run up like this and you know the odds are good, they're going to keep it going, right? Even though we have that major top here, you want to look for a trap entry on that high. Okay, again, these are called, I call these crown reversal patterns. They're pretty simple, right? We go up, buyers once, buyers twice, trap high, back down again. Okay, so again, three things, right? Major turning point, signs of exhaustion, and then we need some sort of catalyst because momentum is so strong there for the bulls. We have to get some catalyst here to turn this thing over, and that means running those stop losses, right? So same idea off that high here, okay? And then where do you think, if we did get a reversal, where do you think the market would want to go? It would want to go back into these ranges, right? Range, a lot of overlapping candlesticks, right? So that area, especially this prior week close, right? That 13,199 on the Nasdaq seems to be a very, very sticky area this week. Same thing over on the S&P, right? We go up, buyers once, buyers twice, trap it in and back down. So that prior week close right there. One thing we talk about in our trade room is as we get later in the week, Thursday and Friday specifically, we start watching that prior week close, right? That becomes a pretty good magnet. All right, so now you kind of know more about how to buy it as we're going higher, how to avoid buying into that high, right? And then how to use signs of exhaustion here for that short back down again. I like it, right? Good game plan for tomorrow on the E-minis. How about some crude oil? Boy, I'll tell you, crude oil is, let's break it down right now. I think one of the most important things you can do on oil, if you're an oil trader, is get down in the description and take a look at that 60-minute time frame, because that will really that will really show you you need to get some context on this, right? Because right now, we're obviously very bearish, right? We're very bearish right now here on the oil. We're bearish into a trading range. Now, under most conditions, if you see a bear market into a trading range, what do we talk about in the free video series? We talk about getting a pullback, trapping the buyers in, and back into the range, right? Because ranges act like magnets. We talk about breakouts, right? Breakouts below the trading range, right? So under normal conditions, if you just saw this area, this chart right here, I would say, okay, we're bearish. It's a trading range. I want to sell at resistance above the range. I want to trade breakouts down below the range. right? But this is where the context, this is where the situational awareness comes in. This is where the bigger picture comes into play. Because you'll notice on the 60-minute chart, and it's a little bit easier to see in the 60-minute chart, right? You'll notice that we're now all the way back down, really in an area that we would have killed to be in earlier in the month, right? Buyers literally would have piled up. They had to be piled up, right? Buyers must have been piled up underneath that 79 area to get any chance to buy as low as they possibly could, right? Because of that big gap up, right? That we had that OPEC production cut announcement that blew things up, right? So up to that $80 a barrel. So we're in an area right now where we're very, very bearish, but it's almost impossible to want to sell down here until we can see these bears. Now there's a chance, right? There's definitely a chance here. This market may continue and try to fill that gap, right? That 75-63 gap, right? There's also a chance here we may end up getting one big pendulum swing, the amount above, the amount below. There's definitely that chance this thing continues going lower because, I mean, look at this thing. It's a very bearish short-term momentum right now. But I'll tell you right now, this is a very difficult spot from a technical standpoint. I'm a technical trader, right? So I'm not a fundamental trader. As a technical trader, it's very difficult to justify selling at such an obvious support area underneath such an obvious bullish range. Again, not to say it can't keep going lower, but this is a tricky one. This is definitely a tricky one. So really knowing this information with this all in mind, I think my favorite trade on the oil would be a bear trap off of this low, a reversal off the 77.75 level. On the 60-minute chart, I've got this kind of outlined a bit better here. It all really comes off of what I call a 1-2-3 move off the high. If you're in my trade room, you know what that means. So we get some great support around this 77.75, 77.70 area here. Now, of course, if I want to be a buyer in an overall bear market, right, or short-term bear market, what did I need again for a reversal? What was it? Okay, a major turning point, got that. I need a sign of exhaustion, right? So 2 tries, right? And I need what? A catalyst, right? Run those stops. So great example once again, as we go lower, couple ways we can do this, and you can apply these right on the S&P and Nasdaq as well. The crown reversal is the best one, right? So bears come in, they try once to take it lower, they try twice to take it lower, right? Now we've got signs of exhaustion. Now we can sniff out where those stops are, right? Because of course, if you're caught short and you get stopped out, what happens? You become a buyer by definition, right? You're buying your way to cover that short position. So of course, a 2-try failure, right, is in the cards here. I would love to get a trap entry, really make this a crown reversal, right? That little trap entry below that low. That would definitely make this pattern difficult to lose money with that trap entry. Another one would be a double bottom entry, right? So for example, sometimes we'll run lower. The bears are so strong, they pull back, they retest that low. Now, major turning point, same thing, signs of exhaustion, 2 tries, right? I like to use 2 tries. That way I know I get a bunch of stops to light up and then run stops, right, with that reversal, right? So double bottom reversal, 3 steps to kind of picking that bottom here. Probably the hardest part about this is if you go higher. If we go higher here right now, it's very difficult to want to short this because now we have a rising support trend line. And now ultimately, if we do go higher here, we have to assume now, remember, this is that big range, right? So if we do go higher here, we should be looking to rotate roughly about the same amount above that trading range, which puts a real big bullseye right up around this 81.50 area. So very difficult as we go. If we go higher here, not easy here right now to be a seller. Now, could they? Of course they could, right? But again, we want to look for, at least in my eyes, I want to find the most reliable trade, the trade that gives me the best chance of success. And as it goes higher here, what did we just talk about on the Nasdaq? what's the best way to buy if we're kind of worried about bears up here, right? To want to sell this thing back down. Traps, right? We need to get some sort of trap set up. And what that means is you want to first get a nice strong pop up. You want to see a shallow pullback. Shallow pullback doesn't allow folks to get in. The higher high in price, right? The higher high in price is really important because it confirms we're not just getting a V top, right? And getting bashed back down again. If I can get that higher high in price, that will confirm now that trap entry, right? And we can use that now, right, to flush this thing out and try to take out that 81.52, 81.60 area up overhead, right? The only real way to sell this thing if we go higher here, because we have that rising support trend line and because we have that such potential for this to snap, right? This kind of slingshot or squeeze back up to that 81.60 area. The only way to really do it is with one of those crown reversals, right? Let the buyers try once, let them try twice. I have to sell as high as I can here, and that's really only because, not because of momentum, but because of that rising support trend line, right? Makes sense? I need to be short well in advance of that rising support trend line, right? You're going to need to get some sort of trap entry on that. It's either that or you have to get underneath the trend line and then you're trying to short down here, and that's your risk reward ratio stinks now, right? It's horrible at that point. So really the only way to really sell this thing if it goes higher here, right, is to get some sort of bull trap above that high to avoid that trend line. Not a very desirable trade in my opinion, right? I'd much rather wait for it to pop up, give me that bear trap and grab that going higher. Right? Again, because of all the support, because of that range overhead. And of course, if I'm wrong, right? If all hell breaks loose, right? If we see this thing just dump and run going lower, we're going to then take a big move down, strong move will want to be retested. If that's the case, we'll draw channels off the low. We'll find channels off the high. We'll wait for that nice steep pullback. You guys know I love channels, right? What do? We get the buyers trapped in, right? Like up here. Right? Get above that moving average, trap those buyers in, and sell into those stops. So if we do see this thing, like I said, this could easily keep on going. Technically right now, we need a little more proof of it going lower before we can start looking to be a seller, right? So, but if they do end up rolling this thing lower and giving us a nice strong shot lower, it's just a matter of drawing that new channel, not chasing it lower, obviously, waiting for the pop up. Because again, anytime we see a strong move down like this, you're expecting, right? Strong move, expecting that pullback, right? That failure and back down again. Think about that same pattern over here. All right, guys, that'll give you the roadmap for tomorrow. Obviously, the markets are pretty wild right now. Earnings season is here. So, anything is possible. We'll definitely catch up with things and update things tomorrow morning in the trade room. I'm sure there'll be something I missed tonight on the video, but that's okay though, right? Tomorrow morning, 8 o'clock Eastern time, the game plan is ready for you guys. Hopefully I'll see you tomorrow morning at the opening bell. Don't forget too, if you need any help with the free course links, the trade room membership links, all the additional time frame links, they're all linked up in the description of the YouTube video. If you have any problems about this stuff, just give us a call, send us an email, use live chat. We're always here to help, right? We're only a phone call or an email or a live chat away if you need help along the way. All right, guys? So keep in touch. Hope you learned a bunch in the video tonight. Hopefully we'll have another great day tomorrow morning in our morning trade room. If we don't see you there, though, we'll see you guys same time, same place tomorrow night, and we'll do it all again, getting ready for a big Friday trading session. All right, guys? My name is Joseph. Thank you so much for tuning in, especially watching all the way to the end. Now get out of here. Enjoy the rest of your evening. Be well. Be nice to each other out there tonight, and be here next time. Adios, amigos. Bye-bye for now.